Hi guys, thanks for tuning in to another episode of Nuggets News. In this video, I want to talk about what happens next to Bitcoin. Now, I've been in this space since 2012. We're in an interesting time where a lot of people are talking about Wall Street ETFs and how that's all going to play out. Now, I don't think it's that important, and I'm going to talk about why and all the factors that have led up to where we are now. So last year, Bitcoin obviously had that incredible run, and we saw lots of speculators come in with the lure of getting rich quick. But Bitcoin really came from that libertarian movement with Satoshi embedding the message about bank bailouts in the Genesis block 10 years since the GFC now. So we're trying to create a new financial system of sorts. Now, last year, whether or not futures and Wall Street coming to Bitcoin was sort of responsible for that run up in price, I think it was one factor, but really we had that euphoria and, prices running up anyway. So some people were saying that was the cause, but if you look at what futures are, they're just instruments that track the price. A lot of those ETFs that are proposed are also just ways to track Bitcoin's price. They don't actually buy any real Bitcoins. And that's kind of what Wall Street does. Now, the backed exchange that's hopefully coming online will hold real Bitcoins. The VanEck ETF will have to hold real Bitcoins. But again, we don't want Wall Street to come on board and build these other financial products that sit on top of these, or options and so on, because that's what we've kind of seen with gold and silver. People saying, I want exposure to these metals, and rather than going and buying silver, the market is actually too small to even take that money. So we build all these products, and then they have products built on top of them. Then we have margin accounts, leverage, inverse ETFs, double, triple leverage. All this stuff is a house of cards with little, if anything, underpinning it. Now, do we want Bitcoin to have that? Absolutely not, guys. We've seen it in the silver market where at 3 a.m. when no one's trading on US markets, we have an entire year's worth of annual production dumped with these futures contracts. It's called naked short selling because you don't even have to own any silver to sell the silver that's produced by every miner and company in the world. When did that happen? When did the guys, as I say, in suits at keyboards start to determine the price of real goods produced by real people? Pretty crazy stuff when you stop and think about it. Now, in terms of all that, what happens when it goes wrong? So this is all nice when people are piling in and buying ETF shares off the other guy at a high price. But what happens when someone runs for that exit and says, look, I need to sell these, and then he says to the guy down the food chain, and it goes down and down through all those different layers. And we kind of got a preview of this when the stock market had a bit of a tantrum with all the volatility products that are on the stock market. Now, again, volatility isn't a real thing. We don't have it underlying. It's not like having gold or oil. Volatility, again, it's all just priced off other things. Now, those inverse volatility products and double, triple, again, they all had to be ceased trading. And, just say sorry to the people underlying them. That's the people that should have made money, the people that lost a fortune, because these products just, didn't work. People trading on margin got huge liquidity calls. Businesses were completely broke, shut down from one day, from one trade in one account because of how crazy this sort of house of cards can operate when you're on the wrong side of it. So that's a bit of a preview, and that's one of the reasons I don't think we really want Wall Street getting fully on board Bitcoin. Now, the second one to talk about here is fiat money. Now, we've seen hyperinflation. It's been in the headlines a little bit. Obviously, it's a better store of value than if you're in those countries where money's being printed left, right, and center. But we have a debt-based monetary system. We have shadow banking. We don't really know how much money exists. Now, these different countries are paying each other currency, and again, they don't really know how much exists. So we don't really know that some countries aren't printing more than they say they are to buy oil or to buy land in Africa and so on. And when there's nothing stopping you printing more money by just pushing a button on a keyboard, again, this is all loosely based on trust, and something has got to give at some point. We can't continue down this path ever since we got taken off the gold standard. Now, we've seen crazy things happen, like the Swedish central bank print money out of thin air and then buy billions of dollars of Apple shares. When did this happen? Central banks in Japan own 50% of all ETF shares. Who would have thought that don't imagine if we had a way to print money out of thin air and buy more shares or crypto or whatever. It's just completely crazy in my eyes. The next thing to talk about is the store of value and the positive. So what is Bitcoin offering? We know it's the first ever digitally scarce asset. The halvening in 2020 will be the first time that Bitcoin's really been on the world stage, and we're going to decrease that new supply coming into the market. So the basics of supply and demand should say that's pretty good for Bitcoin. Medium of exchange, we do need to explore all those different scaling options, but the fact is you can send $1 million around the world for a few cents pretty quickly. It's far better than the legacy financial system. So we want mass adoption in all these different countries. Bitcoin is borderless, and all those usual things we talk about is what's really going to determine its success. More and more people are going to realize that your wealth can be confiscated off you. Now, during the Cyprus bail-ins or the Greek ATM freezes, they all really caused big Bitcoin rallies a few years ago, and a lot of people don't know that are just new into the space. We've heard governments talk about cashless societies, so all these things are just putting more and more pressure on people wanting something else, and we have this alternative system up and running. People are already using it. People want change. Look at Brexit or Trump getting elected. Australia's had 5 prime ministers in 5 years. Before that, I think we had 3 in 24 years. Inequality has never been higher in terms of wealth. If you look at the statistics of the rich are getting richer far faster than the lower income people are gaining wealth in terms of percentages and so on. So people are feeling that strain. People aren't watching media anymore and TV. Never before have more people been turning to YouTube or different social media to spend their time. And there's so many influencers that are spreading this word, whether it's because they're personally invested in Bitcoin or other cryptocurrencies, but just the awareness in general that this is here, this is an option. And a lot of people aren't happy with what banks and governments have done, and they can't just force you to trust them and use their system if we have an alternative. So this is all worth fighting for, guys. I guess finally the thoughts are around this buzzword of social impact. Look, I think we will look back and maybe say, geez, Satoshi starting that Bitcoin blockchain was a huge moment in history. Maybe it will be part of a social revolution as governments continue to print money and we become more and more indebted and more people choose an alternate system to some degree. Who knows if it takes off completely in some countries, to a smaller degree in others, but I think it is only going to spread. So I hope you've enjoyed my thoughts, guys. Bitcoin doesn't need Wall Street and all these leveraged investment products. We want the real thing, teach people how to use Bitcoin, how to set up a wallet and so on. Hopefully I can be part of that journey with you as well. So hit that like button, subscribe if you haven't already, share these videos around, and thanks for tuning in, guys. Cheers.